Howdy, everybody. Welcome to Liberty Call. Today is Thursday, June 26th, 2025. Hope you're having a fantastical day out there in the interwebs. It's a pretty nice day here. We've had a little rain. It's a little cooler than it was over the weekend, which is nice. So hope you're having a great day. Astros are playing a day game right now. Just finished up the eighth. The good guys just took the lead again over the Phillies. So let's hope the top of the ninth goes well for my guys. So anyways, all right. Well, markets march to new record highs as cooling Middle East tensions and growing Fed rate cut bets fueled optimism. Treasury yields slid and the dollar hit a 3-year low, and oil prices edged higher on solid U.S. demand. But the summer volume thinning and geopolitical risks lurking, traders aren't exactly kicking back yet. So before we get to all the news, and I might say 2 or 3 smart things, I need some help from you. Could you do me a favor? Yes, you, Mike. I see you sitting there. Give me some thumbs up. I'd like to share, subscribe, a follow, and press that notification bell. All right, well, let's get to the markets. There we go. Dow Jones was up 0.94%, 404 points, closed at 43,386. S&P 500 up 0.8%, 48 points, closed at 6141. NASDAQ up 0.97%, 194 points, closed at 2167. The VIX was down 1.01% today. It's at 1659. Canada up 0.7%, Brazil up 0.99%, and Mexico up 0.95%. In Europe, Germany was up 0.56%, the UK up 0.19%, France down 0.01%, Netherlands down 0.78%, Spain up 0.03%, Italy up 0.08%, Switzerland up 0.04%, and Portugal up 0.49%. Russian exchanges in the green today. The MOEX up 0.22%, RTSI up 0.2%. And the overnight markets, the Nikkei in Japan was up 1.65%, Australia down 0.1%, New Zealand down 1 1/3. In China, the Shanghai was down 0.22%, the Shenzhen component down 0.48%, China A50 down 0.34%, DJ Shanghai down 0.31%, Hang Seng down 0.61%, and the Taiwan weighted up 1.09%. So those are the markets. Let's hop into the market recap. S&P 500 eyes record highs as chip stocks lead the tech rally. The S&P 500 climbed Thursday, nearing record highs as strong earnings from chip makers fueled optimism around artificial intelligence, despite mixed economic data and ongoing geopolitical tensions. Tech stocks led the rally, driven by Micron Technology's upbeat quarterly results and guidance as robust demand for its high-bandwidth memory chips used in AI data centers pushed the stock higher. NVIDIA also hit new record highs, extending its roughly 40% rally since early April, when Trump's reciprocal tariff announcement initially rattled the sector. Meanwhile, Walgreens Boots Alliance impressed investors with better than expected quarterly earnings, while McCormick and Company reported solid profit, helped by efforts to mitigate tariff impacts. On the geopolitical front, Israel and Iran ceasefire appears to be holding for now, providing some relief to markets. However, concerns linger after Iran's parliament approved suspending cooperation with the UN's nuclear watchdog, though Russia urged continued compliance. U.S. economic data painted a mixed picture. Final GDP figures showed the economy contracted at 0.5% in quarter one, the first decline since 2022, highlighting headwinds from Trump's sweeping tariffs. Okay. Yes, people imported more, which skewed the data, but it's certainly not the end of the world. Weekly jobless claims fell by 10,000, but unemployment rate is expected to rise as more laid-off workers struggle to find jobs. Investors are now eyeing Friday's release of the Fed's preferred inflation gauge, the PCE price index, for clues on future interest rate moves. Fed Chair Jerome Powell maintained a cautious tone during his congressional testimony, resisting pressure from Trump and others to slash rates, arguing the Fed needs more time to assess tariff impacts. Trump hinted at replacing Powell as soon as September, raising questions about Fed leadership and future policy direction. Despite economic headwinds, AI enthusiasm and cooling Middle East tensions continue to underpin the market's strength. Yeah, I think getting rid of Chairman Powell would be a major mistake. If Trump wants a lapdog that's going to lower rates just to accommodate his economy, that's a bad idea in my opinion. So, if you want more inflation down the road, certainly go ahead and knock yourselves out. But All right, next article, data report from First Trust, first quarter GDP final from Mr. Strider Elas. All right, the latest economic report showed that corporate profits and GDP both weakened in the first quarter, raising concerns about economic momentum. Economy-wide corporate profits declined 2.3% from the prior quarter, but remained up 6.3% year over year. Profits from domestic non-financial industries fell 2.5%, while domestic financial firm profits rose 2.3%. However, profits from overseas operations dropped sharply by 7.3%. Importantly, when excluding the Federal Reserve's substantial recent losses driven by interest payments to private banks, private sector profit declined by 2.7% in Q1, though is still up 4.4% from a year ago. Even with these profits, models suggest U.S. stocks remained overvalued. Boy, there's a statement that goes a long way. The report also confirmed that real GDP contracted by 0.5% in Q1, the first decline since 2022. Downward revisions to consumer spending, particularly in services and inventories, more than offset small improvements in net exports. Core GDP, which strips out volatile categories like government spending and trade, grew at a sluggish 1.9% annual rate in Q1, its slowest pace in over 2 years. Additionally, real gross domestic income, an alternative gauge of economic activity, was revised higher to 0.2% annualized growth for Q1, up 2.2% from last year. Inflation remains above the Fed's 2% target, with the GDP inflation running at 3.8% annual rate and nominal GDP growing at 3.2% for the quarter. All right. Good stuff there. A little bit of a revision. Next up, also some data from First Trust, the May durable goods report from Mr. Andrew Opdyke. See, we got one out. All right, we got two outs. Top of the ninth. Stroh's up 2-1. Braves still pitching. All right, where are we? Article number 3. Durable goods orders surged in May, posting their fastest growth in over a decade. Though the spike was largely driven by a massive aircraft order. Total new orders jumped 16.4%, fueled almost entirely by commercial aircraft orders that more than tripled from April. The surge was tied to a major Qatar Airways deal during President Trump's tour through Saudi Arabia, Qatar, and the UAE. Analysts expect airline orders to slow and cancellations to rise as global trade and economic uncertainty persists. Excluding the volatile transportation sector, durable goods orders still rose a healthy 0.5%, with broad-based gains across industries. Computers and electronics led the way with a 1.5% increase, followed by electrical equipment up 0.8%, fabricated metal up 0.7%, machinery up 0.3%, and primary metals up 0.1%. However, these gains contrast with recent sluggish trends as non-transportation orders have generally struggled to keep up with inflation and have shown signs of slowing. Core shipments, a key gauge of business investment tied to GDP, rose 0.5%. Stroh's win rose 0.5% in May. If unchanged in June, they would rise at a 3.3% annualized pace in quarter 2, supporting modest economic growth. Meanwhile, initial jobless claims fell by 10,000 to 236,000 last week, though continuing claims rose to 1.974 million, signaling slowing labor market momentum. The Fed is expected to hold rates steady in July, with potential rate cuts back on the table by September if economic weakness deepens. All right. The good guys swept the Phillies. They now have right now they should be sitting alone for the third best record in baseball. So that is pretty awesome. All right, last article to cover today from Zero Hedge. The next energy revolution is coming. Is the DOE, the Department of Energy, ready? This was written by Mr. Drew Bond of Real Clear Energy. So let's see what he has to say. The United States is poised for another major energy revolution, similar to the transformation sparked by natural gas fracking. This time, the focus is on clean technologies such as advanced nuclear, geothermal, natural hydrogen, and fusion energy. America possesses abundant resources to support these innovations, but outdated bureaucracy within the Department of Energy, the DOE, threatens to slow this progress. Drew Bond of Real Clear Energy argues that with smart reforms and leadership from someone like DOE Secretary Chris Wright, the department could once again become a catalyst for energy innovation. The first step is streamlining the DOE's complex and redundant application process. Currently, companies face significant delays navigating paperwork that often requires community benefit agreements or labor partnerships before technologies are even commercially available or viable. Standardized applications and AI tools could improve efficiency, lower barriers, and speed up the deployment of transportation technologies. Bond also highlights the need for to reform how the DOE applies the Natural and Environmental Policy Act, the NEPA. While the DOE cannot overhaul NEPA alone, it can use its discretion to expand categorical exclusions for low-risk projects, streamline internal reviews, and release funds faster once milestones are met. The DOE should also avoid picking technological winners and losers. Instead, it should focus on accelerating promising technologies by bridging funding gaps where private financing is insufficient. Supporting a broad range of energy solutions from nuclear to grid software will allow the market to determine what succeeds based on merit. Finally, Bond emphasizes the need for transparency and accountability, tracking application processing times, and rewarding DOE employees based on performance rather than tenure will create a culture focused on results. I don't think government employees like results. They like just getting paid. With these reforms, the DOE can help unlock America's energy potential, strengthening energy security, economic growth, and global competitiveness. It's a nice theory. They'll probably do nothing and stand around with their hands in their pockets and go, I just don't understand why everything's more expensive. It's crazy. Anyways, all right. Well, that is everything that I had to talk about today. Was this as exciting? I thought it was exciting. Even the dogs are asleep. Anyways, well, if you need to get in touch with me to do some financial planning, get your crap in order, where do you want to go? Doodle-doo-doo-doo, DSAFinancialGroup.com. All of your financial planning needs can be addressed there, so give me a jingle. I'd be glad to help. All right, well, that is all for today. I hope everyone out there has a wonderful evening. It's already a good day for me since the Astros already won, and I got some meetings tonight, so, going to be doing some chores and stuff between now and then. So, all right. Well, hope everyone out there has a great night, and I'll talk to everyone again next time. Adios.